Welcome to Ilagan Whiteboard Friday, where we look at complex legal and compliance issues in a simple to do way. This series is brought to you by Ilagan, your partner and provider of end-to-end business services. And Plugged In, Be Hard Startup.
Hi, welcome to Ilagan Whiteboard Fridays. At Whiteboard Friday, we look at various complex tax issues and compliance issues in a simple fashion which the business owners and founders can understand and can get a strategic view of what it is. So today we will look at service tax. Service tax is a fairly complex issue, especially with the information technology sector. You can refer to these books, but we will try to see how we can minimize these complications to basic strategic views which can be used by the business owners. So first of all, what is service tax? So service tax is a tax which is levied on the services. Earlier we have all been grown up with paying sales tax on various products that we have been buying. Services sector lately, about a decade and a half, when it started catching up. So the government felt the need that this sector should also be taxed to bring in parity with various products or manufacturing and other stuff. So that's why the service tax was introduced. Now, why service tax? Service tax is a major source of revenue for Indian government with the services sector, not just in IT, rather hotel, tourism, all these places, even travel. All this qualifies under the services. So this has become a major source of revenue, and that's why service tax is levied. Service tax is a kind of an indirect tax. It is not linked to your profits of the business. That means it depends on the revenues of your business. So whatever billing you are doing, you need to pay a service tax on that. So the government has specified for small service providers some relief. So if you have not crossed 10 lakhs of your turnover, service tax is not mandatory, but beyond 10 lakhs it is mandatory. At cases, it is good to have service tax before 10 lakhs also. That depends on case to case. For more applicability to your business, it is always good to consult a chartered accountant or a tax expert on this. So after 10 lakhs, it is mandatory. Before that, it is optional. Currently, exports of services is exempted from the service tax, but this is not applicable for the calculation of 10 lakhs limit. So suppose if you have done some exports and some domestic, and if your overall revenues are more than 10 lakhs, you have to charge service tax on the domestic portion itself. So next comes set-off of service tax. Set-off is a concept where whatever service tax you collect from your clients and whatever service tax you pay to your vendors, for example, any service provider whose facilities you are using, it could be as low as a telephone service or an internet service. So those services is called input service, what you pay to your various vendors. Whatever you collect from your clients is called output service tax. So the service tax allows you to do a set-off of this. That means the output minus input, and only the difference has to be paid to the government. So that's what a set-off is. This gives a very good relief at many places where you have a high input service cost. One more thing you should remember is service tax you have to pay to the government once you have crossed 10 lakhs, or if you are applicable into the service tax net, irrespective of whether you charge it from your client or not. So charging from your client is a decision, it's a pricing decision that is decided by you. So you have to see whether you provide a X plus service tax pricing or it is X inclusive of all service tax. In either case, you have to pay the service tax if it is applicable in your case. Now we'll look at when the returns has to be filed. So as you might be aware that most of the taxes has a returns to be filed with the government. So service tax returns are filed every 6 months for the period ending March and period ending September. So the returns are filed in the month of April and October accordingly. Although the returns are filed every 6 months, the tax payments is due every month. So if you are making an online payment, 6th is the due date for making the payment. Otherwise, 5th is the due date for making the payment of service tax. If you don't make a service tax payment within the due date, you incur an interest for the delay in payment. And if you don't file the returns in time, then you incur a penalty for the delay in filing a return. So this is applicable for any taxes. If you look at any delay in making the tax payments late qualifies for an interest, and any delay in filing the return qualifies for a penalty. Now we look at what is the rate of service tax. Most of the cases it is 10.3%. Out of that, 10% is the service tax and 3% is the education cess and cess on this. So overall it works to be 10.3% for the service tax rate. That's it on service tax. I think we have already covered. So few major recap. Exports are currently exempted, but it is not applicable. You should not calculate the exports during calculation of 10 lakh limit. Under 10 lakh, service tax is optional, but after 10 lakhs it is mandatory. One more important point: if you have charged a service tax in any of the invoice, you cannot have a selective invoices for charging service tax. So you have to henceforth, from that invoicing date on all invoices, you have to pay a service tax even if you have not charged it. What is service tax? We have already looked. So that's it. 6 months for filing of returns and every month for payment of service taxes. That's it on E-Lagan Whiteboard Friday for service tax today. I hope you had for more queries, you can always drop us a mail at support@elagan.com, or you can even visit our FAQ section which covers a lot of these questions on elagan/kb, elagan.com/kb. Thank you.